Welcome to today's 24-hour global financial update. Today's focus: U.S. inflation rises, and the Federal Reserve may cut rates 3 times by year-end, triggering major market volatility. U.S. CPI for August recorded the largest increase in 7 months. While core inflation met expectations, the labor market showed signs of weakness. Traders have fully priced in 3 rate cuts by the Fed before the end of the year, and even expect 4 consecutive cuts by early 2026. The European Central Bank held rates steady as expected. President Christine Lagarde stated that the disinflation process has ended, and inflation levels are now where the ECB wants them to be, though the outlook remains uncertain. The International Energy Agency, IEA, raised its oil supply forecast for this year and next, intensifying oversupply concerns. WTI crude plunged over 2%, falling below $62. Alibaba launched its next-generation AI model Qwen 3 Next and open-sourced part of its architecture. Its stock surged 8%. The company also began using its own chips to replace NVIDIA's products. Now to the market movements. All 3 major U.S. stock indexes closed at record highs. The Dow rose 1.36%, and the China Golden Dragon Index jumped nearly 3%. European and Japanese markets also rallied, with the Nikkei hitting a new high. Among hot stocks, SoftBank soared 10%, Oracle dropped over 6%, and bank stocks broadly gained. The U.S. 10-year Treasury yield briefly fell below 4%. Gold edged down, crude oil plunged, the dollar fluctuated, and both Bitcoin and Ethereum continued to rebound. Key events to watch today. With stable core inflation and a weakening labor market, the likelihood of a Fed rate cut next week has increased. While investor sentiment remains optimistic, falling oil prices and bond yields signal rising stagflation risks. Investors should watch closely whether the Fed's easing measures meet expectations. Thank you for watching today's market news. If our information is helpful to you, please hit the like button and follow for daily global market insights. We'll see you next time.